The bulls fail to push through and the bears crash the party. Oh, what a difference a day makes. This is Invest with Jacob. Okay, guys, so before I jump into the analysis, it's clear by the comments that some of you are struggling still with what Elliott Wave is and what it isn't. So I want to explain that really quick and give you a couple tips on how to utilize these videos to better your trading. First, what Elliott Wave is not. Elliott Wave is not going to give you one clear, true path that must happen, and that's the way it's going to go. No one has that. If they did, we'd all be rich. What it does do is it takes the nearly infinite paths that the market can take and boils it down to 2 or 3, telling you how the bullish path and bearish paths set up. It's not about being right. It's about understanding the posture of the market and what key levels change that posture. So these videos are meant to give you those key levels and say, okay, that key level broke. Does that mean we're going to turn into a bearish structure now? That key level broke. Does that mean we're going to be bullish now? Those are the key things you should be watching for in this video and taking away so that you understand that, hey, if 4,400 breaks, we're now bullish or vice versa. Okay, so just understand that Elliott Wave is not meant to be this be-all, end-all, I guarantee this is going to happen technical indicator, because nothing is. But it is the best indicator for predicting the future of the market. And on the macro scale, it is spot on. The micro, I always tell you, does have its problems, which is why we have the alternate counts, because as of right now, we're in a corrective wave, and corrective waves whipsaw. You can see over the last few weeks, we have been up 100, down 100, up 2%, down 2%. It's very difficult to trade in those environments, so we usually sit out and watch key levels for a path to build to one side or the other. Now, the bears crashed the party today. They came out hot right before the open when the CPI numbers came out, and then continued throughout the day to move the market down. One of the paths we talked about yesterday was if they couldn't take out the high, the bears needed an impulsive move down to get this market turned over again, and that's exactly what they did. Now, I'll get into all that in just one second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the NASDAQ and SP 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, with the bears pushing down, they have taken back control of the market, and you are correct. Yesterday I was bullish, looking for them to push higher, and they were unable to follow through, so we broke key levels today, which turns us back to bearish. So let's jump into the charts and take a look. Okay, guys, so here we are on the 30-minute chart, and as I've said many times, this has a bunch of overlap in it, and wave 4s are very messy, as we're seeing here now, and you get a lot of overlap and a lot of directional changes, which, again, is what we saw today. So off of the open, they were unable to take out this high, and if you remember yesterday in the video, I said the bearish path is they need to hold this high in place because it's under this high here by 1 point, and they need to get an impulsive move down, which they got. So with the bulls being unable to take out the high, the bears needed a 5-wave move down and a break of the 764 to turn this structure into a bearish move down, and that's what it looks like we've got. So we have wave 1, 2, 3, 4, and it looks like they're completing 5 down here to the 4469 to 4442 region to complete wave 1. Okay, of this C wave down. So from there, we would look for a bounce up to this 4511 to 4538 region. Okay, and then a continuation of the move down to this target down here at the 4150 zone to complete wave 4. Now, if the bears are able to drive it down more directly and break this 2.0 extension at 4442 and this low over here, which is 4438, okay, then it does open the door that we are already in 3 of C, and we are going to make a more direct move down with a lot of extensions on that wave in order to reach this target. So 44.42 and then this low at 44.38, that's kind of our support zone here for this to stop and bounce and give us a wave 2 of C. If not, we can see a direct move down from here. For the bulls, okay, it's pretty simple for them now. They need to hold this low. Okay, much like the bears yesterday, they need to hold above this low at 44.38.50, okay, and then get a 5-wave move up that takes out this high. If they can get a 5-wave rally up over this high, then it becomes more likely we're headed towards this wave 3, okay, and staying in the bullish structure. But with the way the market moved down today in a 5-wave pattern, it does look like the bears are trying to take control here and start the C wave down. One other thing to note on the daily chart, if we move over there real quick. Okay, on the daily chart, the MACD indicator has moved up nicely and is starting to curl back over, okay, where it could move down. And what we would look for here is for this to come down with the C wave and have positive divergence on the low, giving us a strong indicator that the next rally is getting ready to take hold, okay? So watch that daily indicator as we move down here. As if they start to move down toward our 4150 target, we should have positive divergence and be able to see the market rally from there. Now, the NASDAQ is playing a little bit more by the rules than the ES did, not completely, because you do have this wave 4 here came into wave 1 territory, which tells us that this could be a diagonal down, okay, which means that this wave here is going to be an ABC structure, and that's why we have an AB lead into it. The retrace held our resistance zone here at 15,048. They were unable to take out the high today, and they have also started a 5-wave move down that will target the 14,492 to the 14,360 zone for its support. We would look for support there and a bounce up, okay, and that would be wave 2 of C bounce. So we would call this A, B, and then 1 of C, 2 of C up, okay, and then we would start 3 of C down from there. Now the retrace for that wave 2 off of our support, which was again 14,492 to 14,360, the retrace would be the 14,706 to 14,838 zone. We would look for resistance there to short that wave 3 down in C. Again, if they are able to push through this 14,360 zone and take out this low, it does open the door for a more direct move lower, okay, and that we're already in 3 of C, which I know gets a little bit confusing, but that is the strongest wave down, and we would look for a more direct move down towards this 13,300 to 13,250 range on the NASDAQ. So pretty straightforward on both. Same thing goes here for the bulls. They need to hold this low and then get a 5-wave rally that takes out this high. And that would be a great indicator that the bottom is in and we are starting a bullish structure to the upside. So remember the key levels I gave you on both charts today, guys. The support that I gave you for the bounce, the level that if it breaks, it becomes a more direct move down, and then the retracement levels as well. That's what is important about Elliott Wave to understand where we're looking for the market to go. When those levels break, then the market's posture changes and our position changes on what the market's doing. Again, Elliott Wave is not about being right or wrong. It's about giving you the most probable paths available. And also remember, guys, we are in a corrective wave, and corrective waves are notorious for all of this chop and whipsaw. It makes them very difficult to analyze. And once we get this low or break out to the upside and get a clean structure, the analysis becomes a lot easier. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com, okay? Head on over there. We got an awesome deal for you today. You get a 1-week free trial on our membership plans, as well as 15% off, and that expires today by using the code WELCOME2022, okay? Both of our plans have a 7-day free trial you can see on the screen here, and again, use that WELCOME2022 code to get 15% off of the price. And we have 2 different rooms. The Invest with Jacob room is just with me and my updates and everything that I give out on my trades. And then we have our throne room with PT, who's one of the best traders I've ever been around. It is an excellent place to learn or improve your trading. So come on over and give us a shot. We give you that free 1-week trial so you can kick the tires, find out if you love it. If you don't, no big deal. We're happy to have you. Okay, guys, key takeaways for today. For this S&P 500, okay, we're looking for the bears to continue their move down towards this 44.69 to 44.42 level, and then look for a wave 2 bounce there, and then start wave 3 of C down from there. Remember, however, if they do break through this 44.42 level and take out this low, this A wave low right here at 44.38, it does open the door to a more direct move lower. On the NASDAQ, very similar to the S&P 500, they are looking to push it down towards this 14,492 to 14,360 level, get a bounce up, okay, and then start their wave 3 of C down from there. However, if they are able to push through 14,360 and take out this A wave low, then it does open the door to a more direct move down in wave 3 over there as well. All right, guys, it's the weekend. Go have yourself a drink, a cup of bourbon for myself, and have a great time with your family. It's the Super Bowl. Go Bengals. I grew up just south of Cincinnati. I can't say I'm a Bengals fan because they were so bad my whole life, but I'll be cheering for them this week. Have fun. Be careful. I'll talk to you next week.